Joined by David Kern. He's the chief economist for the British Chambers of Commerce. So you guys have lowered your forecast, as we've just been saying, for British growth this year and next year. How come?
Inflation is much higher than anybody thought, certainly than we thought. The squeeze on disposable incomes is deeper. I don't think it's a big revision, but I think what we are saying is that this year, with the austerity plan being now implemented very forcefully, growth will be lower. I mean, medium term, our outlook is quite positive. I mean, we think that there will be no recession. We are going to stay in the positive area. There is going to be growth, but growth is going to be low. And initially, you know, we are struggling, but I think that from the fourth quarter onwards, growth will accelerate and the economy will be in a faster path.
Why do you think it's going to accelerate? Because you still have 150,000 job losses that you're expecting over the next 15 months, correct?
Yes.
And inflation's going to continue to bite.
Inflation is going to continue to bite, but it's going to peak sometime in the next 2 or 3 months, and then it's going to come down. Unemployment is going to go up, you point out quite rightly, but this reflects the soft patch we have now. I think that the next 2 quarters are going to be the most difficult because the austerity package is going to bite most forcefully in the second and third quarter of 2011.
So does this mean, when you say that inflation is going to come back down, does that justify MERVYN King's stance? You now say that you expect a rise in UK interest rates in August instead of this month, which you were originally predicting. Can it really afford to wait until August?
Yeah, I think he must wait. I think that we think that even August is too early. I mean, we never called for a rise in interest rates. All we said that when we did the last forecast in March, there was a very, very strong pressure for them to put it up. Even now, we think that the right time to put them up would be November, not August. But the way the mood is now changing, we think that August will be when they are going to put it up. We would prefer them to wait, because although inflation is high, inflation is international in its nature. And therefore, if they put it up now, they have a negative impact on the domestic economy.
Well, this is it. You prefer them to wait. Is that because your members, UK businesses, would have a hard time dealing with higher inflation, or are you more talking about consumers here?
Well, both. I think that you know, at the moment, because of the austerity plan and because of inflation, both businesses and consumers are being squeezed.
Right.
And at the same time, anything they do now on interest rates may add to their credibility, but will not affect inflation, because inflation is not originating in the UK economy. It's the VAT increase, which doesn't make sense to have a VAT increase and then to add to it pressure by putting up interest rates.
So you're subscribing to this temporary factors thing that Ben Bernanke
we're not complacent.
Talks about.
We don't like inflation. Inflation is a problem. But what we are saying that adding the squeeze on consumer at the time when they're already being squeezed is not going to make a big difference to inflation. And
so
you risk destroying the economy.
So in other words, the UK government stays the course with its austerity measures.
Absolutely.
You agree with that, but the Bank of England's got to ease off. Do you think that the UK government is doing all of the right things? What are your concerns with regards to their measures, their austerity program?
We think they should persevere with the deficit-cutting plan. We would like them to do more to help businesses drive the recovery. I mean, they've done quite a few of the right things in the budget. But what we are saying is that because of the restructuring in the economy, the public sector is going to shrink, and the private sector must be the main driver of the recovery. And at the moment, there's still too much red tape. It's still too difficult for businesses to recruit and export. In the budget, they've done some of the right things, but I think we would like them to do more. And we want them not to take away with one thing what they give out with the other. I mean, I think that they are supporting businesses. They've cut corporation tax. But at the moment, businesses, particularly small and medium-sized businesses, are still facing too much red tape, and they find it too difficult to recruit and export. And we want the government to do more to help the private sector to drive this recovery.
David Kern, Chief Economist, British Chambers of Commerce, we thank you very much for being with us today.